Yeah, I'll stay standing, that's fine. So I might just throw to the floor to begin with for any questions that they have for any particular member of the panel. Silence.
No, there's no silence.
Silence.
You go first, Tim.
So one of the, I think the theme of this morning was, and a couple of speakers raised this in their presentation, was the importance of managing cost through the cycle, and also the ability to effectively manage your working capital. So I'd be keen to get perhaps an insight or a comment from each of you in terms of how you're doing that across your respective businesses. David, I might start with you if that's okay.
It's always a challenge when you've got a long production cycle to flex your cost base quickly. I think what we are doing is really focusing on the cost per kilogram of growth, so that we try and offset the inflationary impact with productivity improvements through the farming methods and that focus on fish performance. Obviously the sales outcome is what then drives the working capital lockout. So for us as a business, and that's why it's reflected in the strategy, we want to continue to look at new product formats, work out how we realise the greatest value for our product and manage that inventory turnover, because we are cognisant that you can't switch off a biological asset as quickly as you can a manufacturing machine.
Yeah, no surprise, probably a similar answer. It comes down to planning. So our annual budget is a 5-year rolling. What are the assets that we need for the next 5 years to put juveniles in 2 years' time and harvest them 2 years after that? The other thing I think is, in addition to what Dave talked about with cost of production, it's sweating the assets, making sure that they're fully utilised, seeing the benefits of those investments that we've made in technology and the like. And I guess as a premium product, we'd just like to be a little bit short supply rather than long supply, and just making sure that we can get the margin that we need, and be a little bit probably conservative, I guess, with some of those planning decisions.
Maybe modify it a bit for Katy, because she and her team are helping the cost base of your customers.
I can talk to our company as well. So obviously a very different stage of business to everyone up here, but software as a service is a very low cost company. I've got the ability to scale quite rapidly with not much capital. What's been sort of put forward to us over the last sort of 3 to 5 years is the ability to get to the farmer is much more obtainable now through digital, through COVID, through the ability of taking a Zoom sales call. So scaling our efforts has been able to help us go global quite quickly. So we'll continue down that path as long as we can.
GrainCorp has done a lot of work on variabilising costs, and I think it's important in a cyclical business. And one example I'd call out there was our rail contracts, where 5 years ago we had a $25 or even $30 million take or pay liability. By fully variabilising those contracts and looking at what was important to us and also to our rail partner, we were able to improve the margin for the rail partner and the cost to us on a variabilised basis. We've done that sort of activity right across our business. More recently, we're seeing real advantages come out of use of advanced analytics and data techniques across a scale network. We've got lots of moving parts and lots of opportunity to optimise, and we've found big data solutions have really dropped cash to the bottom line through better planning, ultimately. The other thing I'd say is, in a business exposed to commodities, one of the great resilient factors of our business is inflation and interest rates in particular are included in the commodity pricing that the customer expects to pay and the farmer is exposed to. Cost of carry, we call it, for interest rates. So in many cases, we don't even have to negotiate with customers to pass on those costs. They flow straight through, which means we can focus on the bits we can control in our business and be far more competitive, specifically to the growers that we work with.
Thanks. So at Sunrise, not too dissimilar to what's been covered off already. Essentially, the fixed and variable components of shipping contracts in particular has been a key focus over the last probably 24 months. Moving away from a just-in-case scenario during COVID to more of a just-in-time stockholding perspective, particularly in our import business. And of course, in terms of managing those international supply chains, we generally don't forward purchase international rice for more than 12 months out. So we know the homes in terms of the demand where we're going to be supplying that rice into. So keeping those shorter supply chains, which does add complexity into the mix, but does create opportunity in terms of optimizing, how we are able to buy and sell on the international side of things, and benefit that into the working capital components.
Terrific. Question from Charlotte.
Thanks, Paul. Probably largely a question for Robert from GrainCorp. There's obviously a lot of discussion about sustainability today and introduction of mandatory reporting for large company. Do you believe it's foreseeable that you will introduce a new grade of grain and oilseed that perhaps may pay a premium for growers with either carbon neutral or lower carbon intensity product?
Look, ultimately, I think the opportunity is too great for all of Australia that we're unlikely to see too much differentiation in that. We are already using certified canola seed, where we're getting an incremental marginal benefit from the end customer where it's certified. So we do pass that back through to growers that are certified. So there are examples of it, but I think, ultimately, and it's been said a couple of times today, we're looking for solutions that there's an obvious benefit to the farmer, as well as the conditions that they might farm under. So improving yield, lower cost, what's good for the environment is likely good for the bank account for the farmer, is the way we see it. So I don't think there'll be too much differentiation in that respect, if that answers the question.
Hello everyone, my name's Simon Gratton and I grew up in Jerilderie, Dimitri. Talking about sustainability today, I'll question for everyone on the panel. What do you guys do to value add your waste product from production? So for example, through a rice mill you've got rice husk, from collecting mussels you've got shells. What do your companies do? Because that's one way to be more sustainable, is to value add or process your waste rather than just sticking it in the ground.
Sure, I'll give that a go. So from a rice production perspective, all the byproducts historically have been used in animal feed. So that's really underpinned our crop rice division. And then if we talk rice husks, that's ended up in animal bedding as well, that we provide into the network. And then, so whilst that's the byproduct side of things, it's also within the water efficiency drive that we've really been focusing on, with developing cold tolerance varietals that can be planted later on in the season, less water usage as a result, and ultimately providing the growers opportunities to extend into their winter production cycles, because they've got a larger window between winter and summer. So really leveraging whatever comes out of the rice mill, whether it ends up in very high grade Japanese spec sushi rice, byproducts that end up in animal feed, and then of course further byproducts from husks, etc., going into animal bedding. So we really look to utilise the full circle of what's available.
At GrainCorp, if I focus on sort of post the farm gate area, because there's lots of very sustainable practices in Australia that come with farming on one of the driest inhabited continents on the planet. One of the areas that we look at is what we call dust and damaged grain. Our feed business, so animal nutrition business, is very complementary for that. So we're able to capture those products that you might describe as waste and attach a value to them to the right market. Probably the other example is in our oil complex, our used cooking oil business, where we have trucks actually collecting from fast food restaurants and users of cooking oil, has become a really valuable addition to that feedstock space into renewable fuel. So again, right across the ag sector, I'm not sure there's any such thing as waste. If you look at it in the right way, if you look at where the market is, with a relatively small investment, you can turn it into an income stream rather than a cost.
The area of using waste product is an area that we're continuing to look at. At the moment, most of the waste product would go into silage. But what we are doing is there's another one of the CRCs, the Marine Bioproduct CRC. We are actually working with them on a project to look at what are some of the attributes of the product that we normally do discard and how can we get some value from it. So I guess from a Yamba perspective, we'd say watch this space.
Yes, we do our own processing, as I said before, and so the trim from our fish goes into fertiliser at the moment. But one of the things we didn't talk about in my presentation was around sustainable feed ingredients and novel feed ingredients. And the pellets that we feed to our fish are manufactured from byproduct. They're from the sort of a byproduct of fisheries and poultry processes, some soy and some wheat in there as well. But the emergence of novel ingredients, specifically things like sustainably produced algal oil as a supplement or a replacement for fish oil, is in our diet already. So we've taken out about a quarter of our fish oil and replaced it with that sustainably sourced algal oil. On the protein side, there are insect meal proteins and single cell proteins that can go into the feed as well. And so, one of the things that we've looked at with our byproduct is around circularity. So using the offcuts from our processing facility to grow black soldier fly larvae and use that as a source of insect protein in our feed. And so I think, like Asparagopsis, like multi-trophic aquaculture, some great opportunity in that space.
I have one more question, Steve, perhaps from you.
Yeah, Steve Rafferty, CBA. Just for Rob, Gratton and Dave, just in terms of the ocean warming, what are the ramifications there for your businesses? Are there opportunities, or do you think you'll have to get further south over time?
Well, I guess, for our fish, it grows in the warm water and doesn't in the cold water. So we always look for warm weather conditions, and so the current cycle is actually a positive for us. But I think ultimately, as I said in my slides, this is about leveraging but also protecting the environment. And so for our business, that's about what we do with our nutrient load. It's about feed conversion and things like that. Less so probably about the core environmental things like warming.
It is a bit of a double-edged sword because we do get good growth in warm water conditions, but equally, if it gets too warm, it stresses the animal and you end up with mortality. So for us, what we're looking at is, what can we do from a technology perspective? How can we introduce more dissolved oxygen into the system to alleviate that stress during the summer periods? There's some technology with nanobubbles and similar that we're doing trials with in that regard as a means of future-proofing the business. I think the key element that we need to be mindful of is that the 1.5 degrees that we talk about, it's not just the particular impact on the farm, it's the entire ecosystem that gets impacted. So for us, really addressing what we can do around reducing the impact from our own business is critical to ensuring that we preserve the food sources that we need for the filter feeders and provide the best possible animal welfare condition for the land-based abalone.
You can expand Steve's questions a bit and go across the panel because we've got all the mining industry now, it's all long sleeve, long pants. I mean, I'm interested in Katy, are you seeing some changes on the safety side coming through with, I suppose, the I suppose, the awareness of, warmer temperatures, those sorts of things?
How do I answer that? I think with our client base currently being predominantly grain, we are cross-commodity. Any impact on climate is still a hot topic in farming. I'm seeing real change. They've been quite active and eager for education on how to improve their situations. It'd be interesting to understand the obligations put down on your growers, probably more this way. Where we step in is we're able to give them the tools to be able to collate the evidence that they are doing that right thing and bring that back to your level to obviously meet your requirements. So they're very much aware of it, open to it. The pushback is shifting, I think.
Yeah, on safety, there's specific obligations around heat stress management, and we have workplace policies around that. We provide sunscreen, hats, make sure brakes are appropriate, and all and many, many more attributes of managing that. But I think more broadly, as in the aquaculture sector they've talked about, it's the overall environmental impact and more CO2, warmer, potentially wetter climate, actually quite good for grain production, but more volatile, which makes it challenging. And one of the things the sector needs to be aware of is the climate's already changing, and stopping emissions now, even if we could do so, is not going to change that in the near term in our lifetime. So understanding how to be more resilient, some of the practices around farming, some of the practices around seed varieties in the grain sector are all attributes of managing what's already happened and what is going to continue happening, irrespective of decarbonising the environment.
Again, quite a similar response from a rice growing perspective. Rice does love a hot summer, and the variability around the conditions. When you talk to our growers, when you look at the most recent season, this is the wettest drought that's ever been on record. If you go back to the outlook that was forecast in November or December last year. Really, again, the seed varietals and the pure breeding, in particular the science behind that, in growing a varietal that can utilise less water, delivering those targets that are required, not just from an SBT perspective, but into the 2030 and 2050 game plan from a net zero perspective is absolutely fundamental. And then on the safety side, it again has already been spoken about, but it's really that full circle of the chain of responsibility, whether it's the growers delivering rice to our sheds, production workers at the sheds, and then through the processing facilities right through to packing into end markets. Again, top of mind from a safety perspective.
Thanks, Dimitri. Ladies and gentlemen, that brings to a conclusion our session. Sorry, Max, one more.
Oh, thanks. Ben from ORM. Just a real quick one for Rob. On the East Coast weather insurance policy, obviously that smooths for the cycle or reduces your volatility through the cycle. One, how's it going? And two, would you do it again?
Very quickly, I didn't present the slide today, but if you look at any of our investment packs or most recent half-year update, there's a couple of slides in there on that. Product's working exactly as we would expect it to. It protects investors from the downside of drought. The fortunate thing is we've had 4 fabulous years. We'd pick that any day. As a result, we're approaching the cap on the payout, so we can receive up to 80 million a year. We've paid out 70 million a year over the last 3 and 58 million this year. That puts us pretty close to the cap. So in answer to where it's at now, upside from here. So if we get more big years ahead of us, earnings could well be above what we've seen over the last cycle of big crops. Last part of the question, would we renew it? I think it's a bit hypothetical. It was needed at the time to create the demerger of the malt business and the value that created for then shareholders. Our strategy right at the moment is around improving the earnings, improving the diversity of earnings, and you may well find that's more than enough to avoid the need for a product like that. So we'll look at that in 4 or 5 years' time when the current product expires.
Excellent, thank you.
Terrific. That does now conclude the session on aquaculture, grain and rice. Ladies and gentlemen, please join me in thanking our speakers, Rob, David, Katy, Rob and Dimitri. Thanks very much.